What's up, everyone? Welcome back to my channel. If you're new here, I'm Paris and I make videos all about candle making and the starting and managing of my small candle business, LadyCIMONNE Candle Co. We are diving into part 2 of my 3-part Candle Biz series, which is the legal side. A lot of you that are curious about this side, so we're diving right on in. We are talking all taxes today. As a small business owner, or if you're thinking about forming a small candle business, you may think that the IRS not worried about you, right? Like, I'm a small business owner and I haven't even been generating a lot of revenue yet, so there would be no reason for them to come and audit me or worried about how I'm forming my business, therefore how I should file my taxes. They got their eyes on YouTube, boo, including my business as well. So I am actually in the thick of my first tax season, and I understand now how important it is to think about the formation stage when you're in the planning process of starting your small business. How you structure your business is going to determine how you file your taxes and what tax advantages and deductions you can take hold of. So today I am going to talk about 5 important things that I think all small business owners, or if you're thinking about starting a small business, what you should think about when it comes to forming your small business, what entity you're thinking about doing. So let's just get started. Number 1, choose your legal structure wisely. There are several types of legal entities you can form as: sole proprietorship, S corporation, C corporation, and limited liability, which is LLC. But for the sake of this video, I'm only going to discuss the sole proprietorship and the LLC because those are actually like the 2 most common entity forms that us small handmade business owners typically choose from. Sole proprietorship is pretty much what you default to should you not choose to form a legal entity, but there's still tax implications that are important for you to know. So sole proprietorship is pretty straightforward, right? Because you could pretty much report your income and losses on your personal tax form, which is your 1040, through a Schedule C. Your company's profits are then just added to the other income section of your personal tax return. On the other side of that, though, many small businesses like myself form as an LLC, limited liability company. And there are 2 important tax advantages that LLC members can take advantage of: no double taxation and deductible business losses. LLC members are only taxed once, so they report their, income losses when they file their personal taxes, similar to the sole proprietorship. This is called kind of that pass-through treatment. So there's no like additional forms or additional things you need to do. The same way the sole proprietorship file their taxes, LLC members file their taxes the same way. Number 2, use tax deductions to lower your bill. Now, when you first start your small business, we all know, and I still know, that you literally have to stretch those pennies as far as you can in order to fund your operation expenses, make sure you're, able to buy inventory and things like that. But fortunately, small business owners have the advantage of writing off a lot of those startup and operation expenses come tax time. So when you meet with your accountant or your personal tax preparer, and now she'll be, or he will be preparing your personal taxes along with your business taxes, make sure, and I'm sure they do because this is what they do every year, make sure you take advantage of all those tax deductions: office supplies, operation expenses, just, equipment, anything. You can write off quite a bit, believe it or not. So I'm actually, like I said, in the thick of that now. And my accountant is bomb, and he is giving me all the tea on what I can write off and deduct. So it will lower how much you end up having to pay in taxes anyway, if you're at that point in your business. Number 3, write off your startup costs. I kind of got a little ahead of myself in the previous discussion. But yes, many business owners, not only can you take advantage of tax deductions like I just mentioned, but many business owners, even myself, don't even realize that the IRS allows you to write off your startup expenses. And a lot of us think that, well, because I'm not really up and operating yet, I haven't even really launched yet, that I can't take advantage of that come tax season when that rolls around. But you absolutely can. If you're doing your business at home, you can qualify for home office write-offs. You can write off your operation expenses. Again, like I stated, you can write off real estate. You can, if you choose to have office space, you can write off business cards. You can write off professional services such as an accountant, like I had to get this year. So please make sure you are taking advantage of all of that. Speak to your accountant and your tax preparer. And again, they should know these things, but there's no harm in throwing the ball out there again and letting them know. So the startup cost is what I wanted to focus this section on. Of course, we know about the tax deductions, but even before you launch, honey, you can keep track, save your receipts. We talked about organizing the last series, so keep track of your receipts, keep track of everything that you buy. Again, I keep all my receipts in my little accordion here from when I first started. Every receipt, every invoice that I've received, any professional services that I've used this year, I've saved every single thing, y'all, because if I can write that off, I'm definitely going to. Number 4, paying quarterly taxes. Now, according to the IRS, individual business owners, including sole proprietorships, are required to pay quarterly taxes if they are going to make at least $1,000 or more at the end of the tax filing year, by the tax filing year. Now, this may not apply to you as a small business owner. I know for me, this did not apply to me this year because it's based on what you're going to net at the end of the year. And so, you know, of course, when you're a startup, you typically are going to have more money going out than you do coming in. So this may not apply to you, but it is something that you may have to think about as you go into your next tax season. Like myself, I'm in my first tax season, but I'm also approaching my second year of business. And so I have a lot of financial goals, and I'm doing a lot of revamping and rebranding. So I'm planning to, you know, improve and grow even more in sales this year. So I already have this in the back of my head on how I may have to save for quarterly taxes. So keep that in mind as well. The last section, number 5, is the state and local taxes. Now, you know, as a small business owner, this is something that if anything, probably one of the first things you're going to have to make sure you look up and think about. And it's going to vary based on your location. I know I get a lot of questions about those type of taxes, and I can give you the basics and kind of the overall view and things like that. But it's going to require you to look up in your state. Like a lot of my subscribers and a lot of my followers, to believe it or not, are not even where I'm from. And I'm from Ohio. So I'm like, you have to take the time to look up your state and what your state laws and requirements are, because literally every state is set up different, and what they require in terms of how you pay and file your state taxes, how often you pay and file your state taxes, and your local taxes. Not every state is set up the same. So there are 3 big ones that you should think about when you go to start your business. Number 1 is state taxes. Unless you live in one of those states that doesn't have it, you're going to owe state taxes, period. So I encourage you, wherever you're from, to look up your state and Google it and see what the requirements are, how often you have to pay. If it requires, every state kind of names it, different as well. So is it a state license that you have to have, which then means you have to pay for state taxes? Look, y'all, literally every state is set up different. And it's just like, how come y'all, the government, just simplify it and just have just a simple set of what you need to do for everybody? But every state is governed differently, so make sure you look that up. Number 2, property taxes. So if you own a commercial property, which as a new business owner, that's typically nothing we have to worry about. But again, if you're thinking long term, thinking about getting a little candle studio, I know that's one of my long term dreams, is to eventually have my own space. That is literally a goal that I want to have within the next 2 or 3 years, if I can, Jesus. But I would love to have a little candle studio. So if you own a commercial property, you do have to pay property taxes, and that's usually taxed at the like city and county level. Lastly, number 3, sales taxes. If you sell anything, point blank period, you got to collect sales taxes. Now, if you sell things online like us, Etsy shops, you know, e-stores, and we're selling physical products, it can get a little bit more complicated. And y'all, when I tell you, it took me a while to understand this whole thing. So, you know, you not only have to collect taxes where you're located, right? So like I'm from Columbus, Ohio, so I collect taxes for Ohio. But depending on your state, sometimes your state also requires you to not only collect taxes on shipping, but you may also have to collect taxes based on where the customer is from. But that varies from state to state. Ohio does not require that. So I get a little off my shoulder with that. But I do have to collect taxes for Ohio. So when I go to file my sales tax, I had to get a vendor's license, a seller's permit. It's called different across each state. Vendor's license, Ohio calls it a vendor's license. Some states call it a seller's permit. So when you hear like, well, what permits and licenses do I have to get? It varies per state as well. But when I file my sales taxes, I have to literally break down my entire Ohio taxes based on each city. And so I literally sometimes have to go through each city in Ohio that people place orders from. So if somebody placed an order in Cleveland, sometimes I have to break it down per county. So was it Cuyahoga County? You know, if somebody ordered from Cincinnati, was it Hamilton County? So it's quite tedious. Ohio requires me to file every single month. So every month on the 23rd, my sales taxes are due for the previous month. So on February 23rd, I'll be paying my sales taxes for all of January. And so that goes back to the bookkeeping tasks that we talked about in my previous section, my first part of the series. That's part of my bookkeeping tasks that I do the first week of the new month. I go through, I organize, I figure out who all I have to collected sales tax from in Ohio, and I pull my Shopify report, I filter it out for just Ohio, and then I break it down per county. So that way when I get on the website, the Ohio Business Gateway website to go file it, I'll add whatever counties I need to add, and then I have to break it down per county. Great. It's so much fun. So those are what I wanted to throw out to you guys to think about when it comes to forming your small business this year. Y'all, it's so much to think about, and it varies per state. So it's going to require a lot of research, you know, on your end. If you have a tax preparer, they can absolutely help you figure these things out as well. My bookkeeper has really helped me in a lot of ways. In the beginning, I was not doing it correctly, just going to be transparent and real. Y'all know I keep it 100 on here. And my bookkeeper helped me clean up a lot of stuff. And then I had to go back and repay a lot of sales taxes. I did. I'm not even going to lie. So that's why I'm here for these videos, to help you all out during this time, because it can be difficult to think about all of that stuff and figure out where to start. So I hope you all have enjoyed this video. I do have a freebie for you guys. It is a tax deduction freebie. Many of you may not be in the thick of your first business tax year, but that's okay. This list is absolutely not inclusive of everything, but I wanted to make this freebie just in case you're interested. and you know, maybe you have been in the thick of starting your business, it's just not launched yet. And remember, the IRS allows you to write off a lot of that stuff. So this list can kind of just give you like a launching pad on what you could potentially write off later on. So also, my course is open, How to Start a Small Candle Biz for Beginners. Enrollment is open. So make sure you check that out. The link is in the description box if you're interested. The link takes you to my freebies. It takes you to my course. If you're interested in one-on-one time with me, that link takes you to all of that. So please make sure you check it out. And thank you all for showing up for all of my lives. You all have been great. I thank you so much for the support. I look forward to working with you all. For those who signed up and who plan to enroll in my course, you have until February 26th to enroll. There is a payment plan option. So I just look forward to what's going to come when we all come together for class. It's going to be awesome. It's going to be a fun time. But again, thank you so much. I hope you enjoyed this video and you got something out of it, and look forward to more videos during my 3-part series. There's more to come. So until next time, bye.